As we all know, gasoline is one of the most crucial energy that runs the traffic because most of automobiles consider gasoline as the main energy source. Gasoline is also a huge economic subject that draws people's attention, especially in the event of the corona pandemic. And the US is the leading petroleum consuming nation in the world. So now we will take a closer look at the microeconomic sector and make comparison of the gasoline market in the USA, specifically the price, demand, and supply, and then find out the cost between the two periods, that is before and during the pandemic. Overall, for all of 2019, US regular gasoline price is about 2.6 USD with the product supplied of finished motor gasoline up to approximately 9,900 barrels per day. Together with it is the fluctuation in the demand. During the pandemic COVID-19, gas prices around the US at their lowest level in more than 4 years, as millions of Americans, jobless or sheltering at home, forgo their daily commutes. Some filling stations around the country have even been reported offering petrol at less than 1 USD per gallon, which has not seen in over half century, according to AppGasBuddy. In general, from the beginning to the middle of 2020, the average value of gasoline price has dropped compared to last year, and the supply and the demand of gasoline has plummeted as well.
The supply, demand, and price of many kinds of gasoline in the US did not change much in the period of before and pre-COVID-19 pandemic. Before COVID-19 pandemic, in the big picture, the quantity of gasoline supply is steadily growing up in the past 19 years until 2019, not including the periodic changes that happen in every year. Moreover, these changes were not changes much in the pre-COVID-19 pandemic, specifically from January 2020 to the beginning of March 2020. The finished motor gasoline supply remained steady in the range between 9 million and 10 million barrels per day from January 2019 to February 2020. The demand quantity of all kinds of gasoline also remained stable in the range between 9 million and 9,500,000 barrels per day. The price of retail gasoline price is observed to be steady over $2.5 per gallon from February 2019 to February 2020. The price of on-highway diesel price is not an exception, which remained stable for $2.0 per gallon in the same period of the price of retail gasoline price. The supply, demand, and price of many kinds of gasoline in the US changed significantly in the period of COVID-19 pandemic explosion. Supply of gasoline in general dropped dramatically to the lowest point in the past 20 years, falling down to approximately 220 million gallons per day, which dropped by nearly 200 million gallons per day compared to 2019 quantity. The finished motor gasoline product supply can also be seen in a huge drop by nearly 40% in quantity supply until April 2020, which dropped to under 6 million barrels per day. The demand quantity of all kinds of gasoline reduces by nearly a half until May 2020, from nearly 9,500,000 barrels per day, dropped to under 5,500,000 barrels per day. The price of retail gasoline dropped sharply by nearly 30% until the beginning of May 2020. The price of on-highway diesel price also decreased by 17% until the middle of May 2020. Nevertheless, The supply, demand, and price of many kinds of gasoline in the U.S. showed signs of recovery in the period from June 2020 to August 2020. Supply of gasoline in general increased to nearly 330 million gallons per day after the big drop in April 2020. The U.S. product supply of finished motor gasoline also rose to 9,161,000 barrels per day in week 3 of August 2020, which increased by approximately 3 million barrels per day from the drop in April 2020. In addition, the demand quantity of all kinds of gasoline also increased from June 2020 and approached the normal state to nearly 9 million barrels per day in the end of August. The price of gasoline in general increased by nearly 20%, which reached $2.272 per gallon.
The cause of changes in market. Firstly, we're going to talk about a significant drop in demand. Due to the increasingly complex status of the COVID-19 pandemic, it is urgent for the United States authorities to enforce quarantines or even lockdowns. As a consequence, a variety of industries must be halted to prevent the spread of the disease, which leads to the reduction in the demand of crude oil and related goods. Less people come to the office, causing the transportation of all forms to account for roughly 69% of US shutdown. This reduced the consumption of oil to nearly 14.60 million barrels per day. Secondly, it is an inevitably continuous supply. Another reason for such blocking of crude oil's price is the surplus of oil production. Many people wonder why companies do not shut down their business due to the reduction in demand. Even though the demand for crude oil and related goods has significantly decreased and profit loss is inevitable for oil companies, they still have to operate the system. The matter relates to a term called shutdown point. In the oil industry, this point is pretty tricky owing the complexity of the technology and resources required. Therefore, for many businesses, despite an invaluable profit, they still not able to shut down as their fixed cost is so high that shutting down the business will cost more keeping it operating. Consequently, more and more oil barrels are produced, increasing the surplus of the supply chain, thus causing the price to plunge. The price starts rising and reaching stability from June to August due to these reasons. About the economy policy, President Trump makes efforts to persuading OPEC and Russia to resign the restricting exploited production agreement. Recently, the member of OPEC has met and even exceeded the target of reducing the amount of oil exploited. Saudi Arabia will cut off another 1 million barrels per day in 2020's June, while the UAE and Kuwait will reduce more than the target amount. Secondly, USA has restricted the supply and reducing exploited production. As the supply has been restricted, while the demand is gradually recovering when economies start to reopen and the global trading and transportation returns to normal, oil is regaining its value and predict to have cost 100 USD per barrel by the end of this year.
This report examined the U.S. gasoline market at the microeconomic level, which concentrates on supply demand as well as price of many kinds of gasolines, and found out the main similarity and difference among these kinds in order to make a conclusion about gasoline market in general between two different periods before COVID-19 pandemic and during pandemic. The United States, the nation with the highest consumption in gasolines, have been going through the pandemic with the highest sold loss confirmed till August 2020. The supply, demand, and price saw a huge drop in many gasoline sectors due to significant drop in demand and an ever-early continued supply. However, the markets have been recovering surprisingly fast since the June 2020. Then in the August 2020, the number in the market is observed to be put back to the normal state. Limitation. The data collection showed a small number of gasoline types that is currently running the market's US. For the other kinds of gasoline data have not yet been analyzed, but in the general, gasoline's number fall down significantly.